Okay, if this is working, welcome into the Crypto Bunker podcast. All right, I guess this is working. I'm just going to start sharing my screen here. I apologize. It's actually the first time I've used this software here, so it might be a little shaky, but I'm using the Brave browser. I'm using the Brave browser right now for their video sharing, so it's a little slow, which is what I'm noticing here. I just wanted to quickly come on, and obviously this is a bear market for crypto. Everyone knows that now. I think the problem is that there was an opportunity when we were. I can just go to crypto real quick here, or I'll go to Ethereum. There was an opportunity here when we were up in these ranges. And that's kind of when I was getting bullish, but I was also following, the Hedgeye process, and I was looking at the fact that it was going to be a quad one, and so it was going to be deflationary and growth, but that was sort of like just reserved for December, January ish. Now we're kind of transitioning into a different regime. I think that the quads right now are not working as well as they could or should, but obviously right now we're in a bearish trend, and right now to me it's looking just like it did back in June of 22. It's almost the same pattern when we're looking at it, and we still have a long ways to go essentially. And I think what's going to happen, this is just my opinion, it's not financial advice, I have no idea, but we are getting a bearish cross happening. The 20-week is going to be crossing over the 20-week is going to be crossing over the 50 and the 100 week for Ethereum. And in fact, it may have already done so. If I take off the Super Guppy, it actually has done that already. And this is probably the first time in Ethereum's history where we are seeing the 20-week crossover in this manner, because we never really had a true bull market in Ethereum. We basically just were chopping. And so the moving averages were always skinny. They never extended out on a weekly time frame at all. The best we got was this top, and it was basically when we were crossing bullish through the 20-week that we even got that. And that actually ended up being the top. When we look back at this, we can see that we had the extension. We had the 20, 50, 100, and 200 in order. And then we had a traditional crossing of these moving averages here. But now it's a different beast. We obviously had a similar thing here, but these were wider. We had something similar here, but the 50 and the 100 were not as close together. So I do think we're going to test actually this low, and that's probably maybe not a take that everyone has at the moment, but I do think we're going to test that $1,000 level basically. I don't think we're going to hold, based on what I'm seeing now, this low here, which was around 1380. I just don't think there's enough support in that area. And I think we need to come down to this 2017 high even on a monthly time frame. I think it closed around 1,000. But right now we are bumping up against this monthly, which has always held as support. So this could be an area for a short squeeze. Maybe we come back up to, 2,300, but um, it's not really looking great. So we've obviously had 1, 2, 3, 4, 5, 6 down months in a row for Ethereum, which is crazy to even think that. And the fact that Ethereum never really had a bull run, to me, it's not a good sign for the future. But again, we have at least at 1,000, we have these two closing monthly candles here in 2018. We have a closing monthly on the low that we got in June of 22. And then we used it as support here in November 22 to then expand into this quasi in between market, which I wouldn't even really call a bull market. And so obviously on Bitcoin, we're seeing basically right now bumping up against the close to at least the 50-month SMA. And, Bitcoin rarely gets to this level without it being close to a bottom. Obviously, if we look here, there was never a 100-month moving average for Bitcoin. At least on this chart, there wasn't. But there may be on a different Bitcoin chart. I just don't have that one pulled up at the moment. So there probably is that level. But I think for Bitcoin, we're probably going to touch that level right there. And that would be around 38, 40K or so. But really the reason I wanted to make this video today is to look at the rates market. And that may seem boring to some people, but looking at the moving averages right now for the 10-year, we are on the 200-week. We have not tested the 200-week like this in a long time. We can look through this entire bull market for rates. The last time we touched it was March of 22 when we were testing to go higher. Now the moving averages are ready to kind of collapse into a waterfall. And to me, this has everything to do with artificial intelligence. I think that AI is massively deflationary. And I'm not saying that because it's like going to be abundance, right? I'm saying that because it's basically that people are going to lose jobs. And those people will have less money to spend. And the people who do have jobs are going to hold on to them tightly and save money. And when people are saving money and getting out of risk assets, like the NASDAQ, which is now crashing below 600 again. And to me, the NASDAQ, it has broke the 20-week pretty decisively. It's then had a little bit of what you would call a bear flag here. And now I think we're going to test probably this level first. We're probably going to break the lows from November 25. And I just don't know exactly how it's going to end. I don't think it's going to be like a huge crash necessarily. But you can see that some of these stocks are already in a massive crash. I mean, look at Microsoft. It's down 30%, and it's now testing the 200-week moving average. That almost never happens in Microsoft. Okay, it happened in 22, but that was after the whole market had crashed. And it happened in March 25. So maybe the market kind of knew at that point that something bad was coming, and then it was kind of this massive short squeeze. And you can almost see like this massive double weekly top that, to me, to be honest, I think this is almost to say this is the end for Microsoft. This is almost an end of world pattern. It's like the devil horns or something. I mean, look at that thing. It's kind of similar to Bitcoin. to be honest. I mean, if you look at Bitcoin, kind of had this sort of double top as well, and it was actually the same time frame as Microsoft. Um, so Microsoft basically topped, you know, it did this double top, which was such a fake top, but the real top was like July 25. But now it's just gone straight down. And I think a lot, again, has to do with artificial intelligence. The acceleration that's happening, even behind the scenes, I think it's much faster than we're being told. Um, I think that we're almost in a singularity type of moment, which to me, I've thought this through, and to me, the trade of AI is actually rates. And that may, again, it may be boring, but I actually think that the trade right now is the 2 year and the 10 year, and more heavily towards the 2 year because that can be influenced by the Fed. And it basically is the Fed rates. And you have Kevin Warsh coming in, who's going to be more, I think he's going to institute more real time data like Trueflation, things that, and then we're going to have the labor market crashing. Unemployment rate, I think, is going to be going up. Although the thing to know about that is with midterms coming, they're going to try to rig those numbers up. So this may be a trade that doesn't happen right away, but I do think there's going to be a crisis where AI just gets so good in such a short amount of time, and it's already happening now. That's why I think rates are trading the way they are, is because everyone can feel the massive deflation. And in terms of the weekly, we just got into order here, right? So on the 2 year, let me just take this away. That's where I do think rates are going. I think they're going to go to 0.5%. It's not going to be a huge percentage gain for actually holding bonds. But you're going to get a decent enough return with holding the bond with the interest rate plus the capital gain. Probably ends up being 6 to 10% return or something, which sounds ridiculous, but it's better than just sitting in cash, right? So I do think there is, basically we've been going along this 20-week for a long time, just bumping up against it. At some point, you're going to have to flush that out. And I think we're very close to that time. Again, we could have a short squeeze. Rates are really, crazy. They can be hard to trade, but it's not really a trade. It's not like you're going to lose a ton of money just holding a short-term bond here. But we can look at the long rates, but the TLT is basically the 20+ year, so it also includes the 30 year. So again, it's not as great. I prefer the this one, which is the IEF. It's the 7 to 10 year. We have it breaking out above all moving averages, ready to sort of make a move, and it hasn't even gotten order yet. So I think we're actually very early in this trade. I think once we break that 200 week, which we are basically right at the 200 week, and if you look back at, again, it has not gotten to this level. We've had bearish crosses on the weekly. Everyone's long rates. Everyone thinks that Trump's going to blow up the system. No one's buying our bonds. All of the narratives that have come out against holding bonds have been so strong. Like, listen to a guy like Mike Novogratz. He says, I'm long rates. He thinks rates are going to spike. Now he's getting liquidated out, right? So a lot of people are in that situation. Francis Hunt, for example, the crypto sniper, he is always banging the drum on rates are going to explode. He said this is going to end in a debt crisis, right? Where rates spike, gold spikes, whatever. I actually think gold is in the process of topping now because first of all, gold has front run all of this, right? You could say. Now, we had a massive topping candle here on gold. But look at how wide those moving averages are. You have the 20-week almost starting to go straight up at this point. The thing is, you have gold volatility spiking. Now, once gold volatility gets this high, it's very likely that this is sort of very close to a top. I'm not saying this is the top. I actually I am saying this is the top. It's not financial advice, but I literally think we're staring at the top for gold here. I think it's overdone. We're going into massive deflation. Now that can be good for gold, so maybe it won't actually completely collapse. But I think we could definitely revisit, the 20-week. I think we're going to revisit like $4,000 level. I just think the trade is overdone. Same with silver. I just think it's overdone at this point. That is how a top forms, kind of what we're looking at there. But again, once this breaks the 200-week, we're in very dangerous territory. That is a rush for safety. That's what's happening today. Today's a rush for safety. Now you have to ask yourself, why are people rushing for safety? I think it's because of the looming AI crisis that's coming. And it's because the AI is so capable. It's actually because of that. That guy who wrote that essay, Something Big is Happening, I think he's right. And I think that is actually going to be playing out in the rates market. Now, if we go back in history, we can see there hasn't been a run like this for rates in a while. And for it to set up in this way where it's not like in 82, we had the 200-week was pretty far below us when we crashed through it. It wasn't like it was the long bull market where we never tested the 200-week, basically going back. You can see we never really tested. Then we kind of just went straight down through it. I would say that's different. It's almost, I'm not sure I could even say it's like 84 either, though. It's kind of its own unique animal. But every time we have crashed through the 200-week in the history of the 10-year, you're going to get a follow through, right? You're going to get a pretty big follow through, and I think that's kind of where we're headed. We can look back to 2019. But again, this was not as big of a bull market from 16 to 18 as it was from 2020 to 23, or even now. And we can look at the super guppy here, which kind of shows on a weekly time frame. Anytime we go in from green, we've basically been green this whole time, and we're still not even in the red. But look what happens when we do go red, right? So we're very close to going red, I think. At this point, it will if we kind of break through here. And I don't know if this is like a time where this test of the 200 is going to hold. I guess you could say it might hold for a little while, but it doesn't look like it's going to. I mean, we are literally right at the 200 now. And so, to me, again, we've already gone into red territory here for the 2-year. And you can see the 2-year, look how long it was in a bull market, right? I think you could say that the 2-year is actually pretty similar to what we saw in COVID. We had a big spike up from a long bull market. We then had a gray to a red and a flattening out, right? Where it was just following that 20-week, and then collapse, March 2020. I think that people are underestimating the possibility that we go back to 0% because people are not realizing the reason that would happen. The reason it would happen is because Kevin Warsh and the Fed have to pay attention to the labor market. They cannot, we already have a deflationary environment now. Truflation's at like 1%. Even CPI is not, it's, it's well below 3 now. This is not an environment where you can just hold rates. And Powell is looking like an idiot right now, continuously. And I think that Kevin Warsh will come in and clean things up, and he will cut rates. And by them cutting rates, it actually will create possibly even more deflation, because people will say, well, why are they cutting rates right then? But I think by that point, it'll be a panic. This setup to me with this flattening rate like this, it's not a good look. I mean, look at that. We're going to break through this trend line at some point. And I just think it's closer than people realize. And I just want to harp that I do think it's because of artificial intelligence. And so, let's see how we're doing here. I don't even know. Hopefully this is still working. Yeah, again, this is probably like a terrible stream. So I'm just going to end it now and hope that it worked. But if it didn't, then that's too bad. So, all right, everyone, have a great day, and I will see you later.